Visuals. News headlines showing oil price charts. Oil prices have extended their losses for the third day in a row. Brent crude and West Texas Intermediate, the world's two main benchmarks, are trading lower, slipping by more than 2% in early Friday trading. The reason? Concerns over oversupply and weakening demand in the United States. Part 2. Why are prices falling? 2 minutes. Visuals. Oil rigs pumping, tankers unloading at ports. There are several key factors behind this decline. 1. OPEC plus production levels. Major producers in OPEC and its allies have kept production relatively high. Even though there were earlier promises of supply cuts, many producers are exporting more oil to stabilize their own revenues. 2. Weak U.S. demand. Data from the U.S. shows a slowdown in fuel consumption. Gasoline demand is dropping as higher prices and economic uncertainties discourage travel and industrial activity. 3. Global economic concerns. China, one of the largest oil importers, is still experiencing slower growth than expected. This means fewer factories running at full speed, less transport demand, and therefore weaker oil consumption. The combination of oversupply and weak demand is pushing prices down. Part 3. Impact on the global economy. 3 minutes. Visuals. Consumers at gas stations, airlines, shipping containers, and factories. Falling oil prices have both winners and losers. Winners. Consumers and businesses that rely heavily on fuel. For example, airlines, shipping companies, and trucking firms benefit from lower costs. Households may see some relief at the gas pump, especially in countries where prices adjust quickly. Losers. Oil-producing countries like Saudi Arabia, Russia, Nigeria, and Venezuela. Their national budgets depend heavily on oil revenues. Lower prices mean tighter government spending and potential financial instability. Mixed impact. Importing countries like India and the European Union may enjoy cheaper imports, but they also face uncertainty in global financial markets. If oil prices fall too low, it can trigger instability among producers, which in turn creates geopolitical risks. Part 4. Market reaction. 2 minutes. Visuals. Stock market boards, traders on Wall Street, graphs of oil futures. Financial markets are reacting quickly. Oil company stocks are under pressure, while transport and logistics companies are seeing positive momentum. At the same time, investors are closely watching central banks. If lower energy prices continue, they could help reduce inflation in many countries, giving central banks more space to cut interest rates in the future. Part 5. Geopolitical risks. 1 minute. Visuals. Maps of Middle East, Russia, and shipping routes like the Strait of Hormuz. Beyond economics, falling oil prices can create serious geopolitical challenges. Countries that rely on oil for government stability may face unrest if revenues shrink. For example, Russia, already under Western sanctions, could experience budget shortfalls. In the Middle East, lower prices may weaken investment in social programs, potentially fueling political instability. Energy security remains a top concern, as conflicts or blockades in major shipping lanes could suddenly reverse today's downward price trend. Part 6. What's next? 1.5 minutes. Visuals. Animated world map showing OPEC plus countries, shipping lanes, and demand centers like the US, EU, and China. So what happens next? Analysts are divided. Some believe oil prices will stabilize around the mid-70s per barrel as producers adjust supply. Others warn that if global demand continues to weaken, especially in the US and China, prices could fall further, even into the 60s. OPEC Plus is under pressure. Will they cut production again to support prices? Or will individual members continue to prioritize revenue and market share? That's the big question. Part 7. Energy transition and renewables. 1 minute. Visuals. Solar farms, wind turbines, electric vehicles charging. Finally, it's important to remember that oil markets do not exist in isolation. The world is gradually shifting toward renewable energy and cleaner technologies. When oil prices fall, some governments delay renewable investments, while others accelerate the shift, using cheap oil as a cushion during the transition. The volatility of oil markets is one of the strongest arguments for diversifying into solar, wind, and other sustainable sources. Part 8. Conclusion. 30 seconds. Visuals. Closing montage. Oil rigs, gas stations, shipping ports, city skylines at night. In summary, Oil prices are on the decline due to oversupply and weakening demand. This brings relief for consumers but creates big challenges for oil exporting nations. In the coming weeks, all eyes will be on OPEC plus, US demand figures, and China's economic performance. Thank you for watching this update on global oil markets. Stay tuned for more insights on the world economy.